1 second. Okay, go ahead.
Good evening, everyone. We are Group 3B. In this presentation, we are going to discuss in the financial service sector. Here's the agenda for today. First of all, we will have a sector overview, which includes definition, past performance, and outlook for 2017. And next is our recommendation about why we recommend to overweight this sector. And followed by our top stock pick, which is TD Bank, and the reasons why we choose TD. And last one is our conclusion. So I will start with the sector overview. Financial service sectors are companies to serve as financial intermediaries to trade and move capitals from suppliers to users. And this sector mainly includes banks like TD, RBC, and credit unions, which are local financial corporations, and insurance companies such as Manulife and Sun Life. Next, I will pass to Charles to talk about the past performance.
As you can see, the red line is iShares Financial Index ETF. The green line is TSX Index. From the 10 years graph, we can find that financial industry is an economic sensitive industry because in bearish markets, the financial industry will underperform the benchmark. However, in bullish markets, the financial industry will outperform the benchmark. From the 3 years graph, we can find that since early 2016, financial industry began to outperform TSX. In 2016, the interest rates, oil price, and the economic activity are in a lower level, and it seems to be a turning point for financial industry. From the 6 months graph, we can find that the financial industry continue to outperform TSX. From the financial ratio, we can find that most of the ratios in 2015 are in the lowest level, and since 2016, the financial ratio began to improve. It seems that the worst time has passed away. Now I will pass to Junius to talk about outlook and the recommendation.
Thank you, Chao. And so before I turn over to the outlook and recommendation, we thought it might be interesting for us to share with you what we believe to be are the key performance indicators for the financial services sector. So what are they? If you're looking at banks specifically, and obviously as you can tell, TD Bank is our recommendation by the color scheme as well as the green comfy couch on the bottom right-hand corner. What are the key performance indicators that management really cares about? Customer accounts, net interest margin, and we'll come back to that later. Capital adequacy ratios, risk-adjusted ROE, impaired loans, loan loss provisions, as well as assets under management and dividend yield. So the question is, why are we even mentioning this? As capital markets participants, when we're looking at banks, we have to know what management is looking for. So if you guys are ever looking at investing in a bank, you got to make sure you have a good grounding on these ratios. So in terms of our outlook, so we believe that the financial services sector should be overweighted within portfolio managers. And the reason is because, number one, as you can tell from Donald Trump, he's going to make America great again. How is he going to do that? Number one, tax cuts. Number two, deregulation. And number three, stimulus spending, so infrastructure investments. All three of these are inflationary. All three of these will deliver the economic growth that has been lacking in the U.S. over the last little while. Canadian economy, as we all know, is very closely tied to the U.S., as the U.S. is the largest trading partner for Canada. And on top of that, energy prices have been quite low over the last 2 years or so. We're expecting energy prices to increase over the next little while, which should help spur economic growth in Canada as well. And then you see bottom right-hand corner, Janet Yellen is thinking. What is she thinking about? She's thinking about how she's going to react to possible inflationary pressures that will result from pro-growth strategies that Donald Trump will possibly introduce. And so we're going to turn it over to Hashim, who's going to talk about the risk to our outlook.
On the flip side, the only certainty in 2017 is the uncertainty. Yes, we are bullish on the financial industry, However, we believe that there are three major risk factors that may have a huge impact on the financial industry in 2017. The first factor we are concerned about Trump factor. His program is slim on details. The extent of his policies is unclear. How much of his policies will be accepted by the Congress and how much of his policies will be implemented. The second factor we are concerned about oil price stability. There is uncertainty about to which extent the world's biggest producer will cut production, especially when you know that two of the biggest producers didn't sign the cut agreement and currently they are in the reproduction process, or production recovery process. Finally, we believe that if interest rates continues to rise, the Federal Reserve will face a very difficult choice between maintaining a loosely monetary policy to support demand and tightening to mitigate inflationary pressure. This would be an object for political pressure in either scenarios. Despite the risk, we still have a positive view about the financial industry. Now I'll pass to Julius to talk to you about our stock pick and the reasons behind our choice.
Thank you, Ashim. And so turning over to our stock pick, the big green machine, TD Bank. So as we all know, TD Bank is the second most profitable company in Canada. On top of that, and this is the real kind of crux to our argument, TD has the largest exposure to U.S. retail banking of all top 5 Canadian banks. And so what does this mean? We really like management's approach. We think it's a favorable approach, and we believe that their discipline over the last several years has been quite positive. TD has invested about $20 billion since 2005 in its U.S. retail banking business. On top of that, they have a new CEO, as we've all heard of, and he's got a real focus on streamlining costs and cutting costs, and we believe that's going to help on the earnings side of the business. And then lastly, TD is squarely focused on improving retail banking, as we've already mentioned, as well as wealth management, and wealth management will benefit from favorable demographic trends. So as people age, they are more worried about how they're going to retire, and we believe that's going to be beneficial for the business overall. Wendy.
Thanks, Julius. The second reason why we choose TD as our recommendation is that TD has outperformed in past 3 years. In this 3-year stock price change chart, as we noticed that TD, the stock price, which is in the ink blue line, has better performance than its competitors in past 3 years. And according to the bullish outlook and the tendency, we expect TD's stock price will keep moving up. Additionally, we take a close look at the financial data and found out that TD has the highest efficiency ratio, and it has also the highest earning per share growth ratio at the same time. It obtained the highest 5-year dividend ratio at the same time, which indicates that TD has very solid foundation of its operations. The third reason why I choose TD is because TD has very disciplined risk management strategy. According to the credit rating agency, TD has the best credit rating amongst the 5 major banks. And besides that, TD also obtained the lowest beta, which is only 0.97, the lowest amongst the 5 major banks as well. Besides that, TD has reduced its exposure to the energy sectors, as we all know that Canadian investors are always concerned about the energy price and the energy sector's impact. And we believe that TD will add more diversification to the portfolio, which has too much exposure to the Canadian economy. Next, let's welcome Kevin for the valuation part.
So because Canadian banking is a relatively mature industry that pays stable dividends, we chose to use the dividend discount model for our valuation. Based on our calculation, we came up with a target price of $72.34, which represents approximately a 7.2% increase above the current price of $67.45. And so this also supports our recommendation to buy TD. So to conclude our presentation, I just want to recap some of the more important points that we've highlighted. So in conclusion, we suggest overweight financials and buy TD stock. We like the financial industry because we anticipate the U.S. economy to do well under the new Trump administration. We expect Canada to do well with recovering energy prices, and with the stronger economies, that'll drive interest rates up, which will help financials because of the larger interest rate margins. Within the sector, we are suggesting TD because we like their discipline strategy, their discipline and their strategy. We especially like the fact that they have a large exposure to the US retail market, and we like how they've also outperformed against their competitors historically. They've also operated with discipline with their risk management as they operate their business. So all in all, we suggest an overweight in financials and buy TD. Thank you for your